Morning, Berlin. I think I'm going to just about finish you guys off. You just had one coding session and two fin crime sessions, and we're going to do a third. But today we're going to talk about fraud. We've been using black box AI across our daily lives for many years, things like Google search and Amazon book recommendations. And that's fine for small types of transactions that you do in your daily life. But when an AI engine makes a decision that can put someone at harm, then black box is no longer good. So if you think about cancer screening or fraud detection or AML, then you have to be able to explain why the black box made the decision. And that needs to be explainable to the experts dealing with it, the consumers that are affected by it, and ultimately the regulators that look after the businesses that we protect. What we're going to try and do today is show you how we can use explainable AI to improve a bank's position in detecting fraud. How we can detect more fraud, how we can reduce the false positives, and ultimately how we can detect fraud typologies that are very difficult to detect with existing typologies. Over 100 million people and millions of businesses are defrauded every year. It costs around $1.3 trillion to society annually. It's a massive statistic. And the key thing about fraud is that behind every fraud, there's a victim, and somebody is getting hurt. I was a victim of social engineering fraud, and I know David was a victim of a purchase scam recently. And I know many of you will have been affected by fraud, or you know somebody who has. There are many types of fraud, but one of the ones that's really driving a lot of broken lives at the moment is a thing called social engineering fraud. And this is because this type of fraud is extremely large in value. The average fraud amount for a consumer is about £3,000, and less than 10% of household incomes can withstand a shock of that magnitude without going into further financial distress. The amount for small businesses is around £20,000. And this type of fraud can tip these small businesses into bankruptcy. And even for very large businesses, the average is over £100,000, and that's a big punch in the P&L. It doesn't matter how big of a company you are. But these types of frauds are really difficult to detect. It's like finding a needle in a bag of needles with a needle that's trying to hide itself. And this is two reasons why this is the case. The first one is social engineering fraud is very rare. Less than 0.001% of transactions are fraudulent of this type. So it's very hard to profile, and existing rules-based engines in banks cannot detect this type of fraud. That's why it's growing so much. But more so, the criminals actually use people like you and me to make their payments on their behalf. They're effectively using you as a Trojan horse to walk straight through the bank's defenses. And the banks are defenseless at actually detecting this type of fraud as it stands today, until now. And at Bleckwen, we've got the techniques and the tools to actually be able to detect this type of fraud, and then we can actually surface that and be dealing with it so we can protect people like you and me from fraud. Now, what we're going to do is we're going to show a technique, an AI technique called behavioral analytics. And this relies on the fact that all of you have a unique payment behavior. And we can use that payment behavior to profile yourselves at the individual account level. And what we can do then is identify any anomalies on your payment behavior and surface that. And what David's going to do now, he's going to do a handful of transactions. And typically, if it's within his normal payment behavior, all is good, and the transaction's accepted, and you move on with life. However, I'm a criminal. I'm coming along, and I'm going to scam David. I'm going to pretend I'm somebody I'm not, and I'm going to make him move some money that's outside his profile. And what you can see is that the transaction is being blocked. And we're using another technique here called explainability. In this context, this is consumer explainability, so that the consumer, in this case David, can understand why the transaction is blocked, and it's not just hidden in the ether of the banking system. More importantly, when we flip over into the bank system, the bank would typically have the Bleckwen platform embedded within their business process. And as we can see here, there's a high-risk transaction. And if we dig into this transaction, what we can actually see is that it triggered because the score on this was about 97% versus a threshold of 50%. Now, the business rules typically within the bank didn't pick this up, but machine learning did. And this is because the granularity of that machine learning can go to that business rules can't. What we can now do is we can flip into another transaction which is a little bit low risk. And what you can see here is that the machine learning didn't trigger an alert, but a business process did. And this is an inefficient rule set that's been set by the bank. And what this typically does is it creates false positives. And false positives means friction for the client, and it means cost for the bank. Now, David can go actually into this transaction and dispel this because it isn't a fraud. And we give the bank not just the tool, the engine to analyze this fraud from their data, but we can also give them the tools to actually close out these alerts. And as David's interacting as a fraud analyst with the engine, it's actually learning from his input. So this is human in the loop decisioning. It's not just a pure AI play. Now, how do we do this? Now, if Dave goes into this high-risk transaction, again, what he can do is go into the detail and we can look at the raw payment. Now, within a raw payment, there's only 5 or 6 variables, not enough to really make a high-fidelity decision on it. It's like, from, to, amount, date, time, them sort of things. However, what we can do is we can transform that data into hundreds of variables. They're called features in data science speak. And what we can do with that, all of these are unique calculations which are done in real time by the AI engine. But as you can see, we can look at debtor, creditor, counterparty relationship between the debtor and creditor, and other elements of the payment to actually surface more fidelity. And it's this fidelity which allows us to increase the accuracy of detection to much higher rates than what you would typically get with a business rule system. Now, obviously, that is totally unreadable by any human. It's great for an AI engine because it's all computations. However, what we do is we manifest that in what we call expert mode explainability so that the fraud analyst can actually focus on the key things that made that alert stand out. And he can then focus on that and clear that alert in a fraction of the time that he would typically do with a rules-based approach.